Hello and welcome to another update video about AGIX. AGIX, my count continues to be, one second, just need to move that across here. My count continues to be a wave 1 to the upside and a wave 2 to the downside, and that is going to be my count as long as we're holding 17.28 cents. Below the 78.6 retracement, if we get a sustained break below that level, I will change my view to something bearish. But for now, as long as we're holding it, there is still a decent chance for a third wave rally to the upside. We are holding here this support at the moment. Yeah. This is wave 4 support, previous swing low support, structural support, and we're holding the 78.6 retracement of the move to the upside. All of that still allows for, a consideration of this as a correction, especially as the move down is corrective. Looks like a 3-wave move down. W, X, and then the Y wave down now, which consists of an A wave, a B wave, and a C wave. If we now zoom in, and there's no change to previous videos, we're looking at the C wave at the moment as a wave 1, a wave 2, a wave 3, now probably in a wave 4 on the weekend. Could develop as a triangle, certainly, yeah, but at the moment I have no evidence that wave 5 has started, but I view this as a 4th wave. I showed you in the last video this trend line and said that as long as we stay below the trend line, obviously the trend needs to continue down. Any pullback to a trend line, could obviously be a pullback trade, but that entirely depends on you. The thing is that I, at the moment, would expect, as long as we stay below the trend line, to still be in this particular account, and that the next wave the next wave down should be a wave 5 of wave C of wave Y. It should get only one more low ideally. So the next low could be the last one, but we need to be ready that it could hit the 17.3 cent level. So are there a few other methods that we can use to establish where that 5th wave should end? Well, we can take the length of the A wave, we go to the high of the B wave, and then you can see actually that we've now reached the 1-to-1 ratio at 24 cents. Now, that is a typical target for a C wave. So obviously we don't really have 5 waves down, at least not very healthy 5 waves down. Or what I can always say, if I have the fibs like that and the C wave has reached an ideal target for if a C wave has reached an ideal target, then I have to consider, okay, what, could it be that the low is already in? Maybe this was the 5th wave, just a very short one, right? But I would not necessarily just believe that outright. I would want to see a break above the trend line first, and I would want to see this move to the upside break common resistance for the 4th wave, because there is typical resistance that is relevant for wave 4. Only a sustained break above that resistance will make it more likely that really a substantial bottom has been made and that we probably don't get one more low. So yeah, it needs to be that view of the Fibonacci extensions. If ideal targets are reached, then we need to look for resistance. And if resistance is broken, then we probably have bottomed. So currently the resistance here for the wave 4 is the 50% retracement. We talk here about 29.8 cents. So if we get a substantial breakout or a sustained break above 29.8 cents, we have to assume that we have bottomed already in wave 2. So that this low is already in. Does that mean Elliott wave wouldn't work? Of course not. It just would have to do with it would mean that the Y wave itself is not an ABC, but a WXY in itself. That means that the Y wave would only have 3 waves and we could already have a low in. This is, however, not a super likely scenario. It is likely and we need to consider it, which is what I'm doing here, but it won't be the primary expectation until we see a clear signal. So hopefully that's understandable. Yeah, that's my update about AGIX at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.